Hey traders, welcome to another US equity update. Starting with the S&P, as you can see, pretty much spot on with what we were expecting to occur last week after the Fed announcement. We saw a pretty big dip, and obviously we've reached levels where we could see this turn around because we've gone pretty close to that minimum level at the moment in a very impulsive manner. But from here on out, potentially we continue to drop into an expanding flat if we maintain this kind of pace of drop, or we start to chop around a little bit and continue to move down towards these lows at 450 or 40.50, and then probably accelerate up to the upside from there. Got a nice little running flat structure to it, so should continue to the upside following this dip, unless we become very expanded, and then we might see a kind of double top type structure, maybe even a head and shoulders type structure forming. So let's see how it goes. And yeah, still bearish this week as it stands, but potentially a choppy week as well. The Nasdaq kind of being pretty resilient in terms of price structure. I was surprised to see tech hold up quite well following last week's announcements, but yeah, as you can see, tech's pretty much still at that overbought level on the higher time frames. Lots of MACD divergence on the 8 hour or the daily, lots of MACD divergence on the 4 hour. So across the board we're getting this MACD divergence, but no real structure as it stands. You might see a little bit of a dip moving forward if this starts to become a little bit of a structure here. But as it stands, there's no real clear picture as to where we're headed from here, what to expect moving forward. But I'll be very, very cautious about being long at the moment as things stand. Dow Jones also took a little bit of a hit. We're expecting a little bit of a pop higher, but as you can see, we just got a really big dip from this level. So this little wave we were looking for actually came a little bit sooner than we suspected, which means we never broke the highs of this corrective structure, which means this next move to the upside is not as potent or should not have as much potential energy as what we were expecting if it was to become a high momentum correction, as we call it. So now we're waiting to see where to from here. Obviously, a little bit of a topping pattern type structure at the moment, but I suspect at least a little bit of a rally from somewhere down in this 3,300 to 3,250, 32,500 level, rallying back to the upside before we can make any clear judgment as to where to from here. And then obviously the Russell continuing to play out pretty much as we thought it would. We never broke the high, so we're still looking at the potential ABC corrective structure for further downside. And then obviously this head and shoulders with a retest of the neckline is still on the cards. So really interesting price action at the moment across the board, but getting closer and closer to what we suspect is a longer term corrective move, especially if the Fed starts to withdraw liquidity and talk about rate hikes. So yeah, we're watching these pairs or these indexes pretty closely over the next few weeks and months. Facebook starting to get a little bit of a dip, as you can see. Understanding at the moment is that it is short-term, little short-term dip where our structure is lined up to be something along these lines. So you can see how a little dip down towards kind of 300, 310, somewhere in that region is definitely on the cards before another push higher. Given the kind of style of the B wave that we had, it's also possible that we pop higher first, because this is quite a choppy section of the correction. This might be your B wave, and you get another leg higher, and then a pullback, and then a move higher. So not very clear price action, but still at the moment looking like further upside down the lines, kind of a buy the dip opportunity. If you get a decent dip, you want to buy it kind of sub 320. Apple also kind of getting a little bit of bearishness with this little C wave extended a lot further than I suspected. And then we're getting another little C wave that extended a little bit further than I expected. But I still think downside is on the cards. When you look at the structure of the waves, I can't see how this is a complete structure just yet. If we are going to get upside, then we should see a little bit of a corrective structure in here forming, which means you'll get a kind of chop back up to the highs and then another leg down. And we'll have ample time to look at buying into Apple. But for now, I'm keeping my bearish viewpoint and suspect further downside moving forward. Amazon has been a difficult one too. It's been difficult to read in terms of structure and exactly what we're seeing in this corrective move here, because we've got a very clean corrective structure, but for this to be really clean, we need to get another leg to the downside. It's an incomplete structure as it stands. Obviously, we could go and break the highs here and then get a leg down, and then all of this still makes sense. It just means we had a bit more of a choppy extended wave, which is equal to this wave here. And then we're waiting for a choppier version of this wave to the downside, which would be this one. And then we're ready to go to the upside, and that's a very big complex flat for further upside moves. But as it stands, and as we're taking off to the upside, it's also possible that what we're seeing here is potentially a little bit of a triangle, something along those lines, which you have to take into account. So like I said, as it stands, it's a little bit uncertain at the moment. So for me to be very comfortable getting into the long at any point here would involve a dip down towards kind of 3,000, sub 3,000 before getting into a decent long. To get long from here, I'm more inclined to look at some call options. If we break the highs here and get a little bit of a flag and then a continuation to the upside, then I'll look to buy some call options to get into that long trade, and maybe some longer dated call options in case we do get this move down and then moves to the upside. So as it stands, kind of mixed bag, but not looking too bad for further upside. It definitely looks corrective for more upside. It's just a matter of when is that upside going to occur. Microsoft, nice little rally off the lows. We did speak about a potential running flat in here somewhere for further upside, which means we could get some pretty decent upside. And if that is the case, you would expect Amazon to kind of follow suit and get those kind of legs to the upside. I guess Facebook wouldn't be too far off either, with its little running flat that it's forming for further upside. So you might see tech actually perform really well, especially if the Nasdaq is holding up. You might see Microsoft test these lows once again, or maybe it's on its own little mission and it's just taking off to the upside. So we'll be watching this one closely for potential entry. If you break the highs and again get a little bit of a flag, you may want to buy some call options to trade that to the upside, because the upside target of this move is somewhere around about 350, 340 if it is going to take off from this level. I much prefer a retest of these lows, but very possible that we are on our way to the upside at the moment. So looking for lower time frame corrective structures to get into those longs, especially once those highs are broken. Netflix kind of being pretty resilient in this level. Structure-wise, really confusing. If this is going to be corrective for further upside, it doesn't really make sense to me, given the structure. It actually still looks more like downside to me. You've got this A, B, C, D, E corrective structure, and then expect further downside down the line. Other than that, yeah, I'm not really confident getting long Netflix at this point. Google continues to march higher, no real decent corrective moves, no correction since September 2020, and even then it was a really small corrective structure, just a little singleton, and the only real correction we had was back in March 2020, and we are way beyond extended levels at the moment from that. So getting long, like I said, is not really something I'm too interested in. The only thing I would like to think about buying is if this potentially turns into a little bit of a running flat, very similar to Facebook, and then you can look to get into some longs there, short term, kind of back up towards 280, 2,800. AMD, we did speak about a little move up into this level before a sell, or potentially a break of this high before a sell, but structurally speaking, it still looks like a sell to me. Still very corrective for further downside. Still got this head and shoulders type structure, so still looking for shorts in AMD, just looking for entry. Bank of America, finance stocks starting to move in the way we wanted it to. We were looking for a big dip, which is exactly what we got last week following the Fed. Now we're looking for corrective structure to trade to the downside. Other than that, we're just sitting on the sidelines waiting for confirmation of the turn to the downside. And you'll see this a lot in a lot of these stocks. Alibaba, still kind of chopping around. I still really like to see a move up to 250 to get this big running flat structure complete for a big sell to the downside. Otherwise, I'd need this little section here to develop into a decent looking 1 hour structure, and then look for a kind of a shorter term short from there. Basically a reconstruction. I wouldn't say this exact corrective move, but something along these lines in terms of correction size. So a little bit of a pop higher after breaking these lows, and that's what I'll be looking for. But ideally, I want to see a move up to 250 to look for the sell. Berkshire, another one of the finances that we look at for a correction and then a sell. Beyond Meat kind of doing its own thing, kind of have to sit on the sidelines now and wait to see what we're going to do moving forward. But I'm still, longer term, I'm still bearish. But at the moment, there's no corrective structure forming just yet. So I want to wait and see how things develop here. Citigroup, another one, we got the big fall. Now we're waiting for the big corrective move so we can get into the short. CCJ starting to fall, but at the same time also has a little bit of a running flat type look to it. So kind of either or. It's kind of a mixed bag at the moment. Not really sure. Resources are kind of, yeah, they're at a tricky level because we're sitting at a place where you can see a little bit of line close to the 0.618 on a lot of the resources. So potentially a little bit more upside if this running flat plays out, but a lot of these resources have looked like they reached a point where they're ready to turn. So it's kind of a mixed bag at the moment. But if this develops into a little bit of a running flat where we start to see it turn back to the upside, that to me is worth a buy, because your minimum target of this move is going to be around about 25, potentially as high as 40. So worth a look if it is going to work that way. CMG, Chipotle. We were looking for a little bit of a corrective move here. At the moment, it's looking like a little bit of a zigzag structure for potential move to the downside. Again, it's a little bit of a mixed bag. Lots of mixed bags at the moment. Lots of confusion in these stocks. I think a lot of people are confused with, are we having inflation? Are we having rate hikes? How do we trade that? No one really knows. At the moment, I'm bearish. I'm going to look at this as one big corrective structure and then I move to the downside. But that's not confirmed just yet. We have this corrective move. So this is something where I'd look to buy some puts once these lows are broken and just see where we go from here. It's also very possible we start to accelerate to the upside and all of this was just a bigger complex correction. And then in that case, I'd look to buy some calls. But I'm really just waiting for lower time frame correction structures which indicate where we are heading moving forward. DraftKings continues to follow our kind of blueprint that we were looking for. This little rally has now faded. Expect this to get a little bit choppy in this level, in this region here, chop sideways for a while, and then push lower, break these lows, and then rally once again to the upside before we get a move to the downside. That's how I'm looking at this stock, and you can see a nice big head and shoulders type structure then forming, and then we can get that big move to the downside. And if people are going to be selling stocks, these kind of speculative stocks like DraftKings are going to be hit pretty hard. It's the same with Penn, seeing the same kind of formations, same kind of head and shoulders type stops, and same momentum to the downside, which we need to take into account. Disney, our little structure that we were looking at, definitely starting to turn to the downside. So once you see a stock that's following all the guidelines that you've been playing with, you really need to start to look for those short positions now. So I'm really interested in getting a short at least down to 157 to break these lows. More inclined to think we're actually going to move even deeper than that. There's still a gap open in this level here as well. So we might see a much deeper pullback in stocks, in which case Disney is one I would like to get into on the short side. EA Sports still kind of chopping around. I actually want to take this off the watch list because it's just chopping around and we need to wait for something more substantial. Expedia is starting to break down. Another one that's just followed our blueprint to the T, and something we really need to break to the downside. So you should be in this trade already, having broken that little flag. Ford, another one. We're kind of just waiting for confirmation of the turn. Another one that just keeps popping higher every time it looks like it wants to turn. So I'm more inclined to just wait patiently for an indication of that short. GDX breaking lower finally. This is one we've been targeting for months. Remember, we spoke about this corrective structure, then and shoulders top, gold breaking down, and now we're seeing GDX following. So watch this to break really much to the downside, which is indicative of seeing stocks continue to fall as well. IBB, our biotech stock, another one that's just following to the T. We went into our little sell zone, started to get some downside momentum, forming a little bit of a flag here, and that's worth looking at for a sell to the downside. Members know where our downside target is. That's a big one. That's a really nice trade. This should be on the top of your watch list this week. IBM, not quite reaching our minimum levels, but we've done enough. So it's all about waiting for a corrective downside move. There's also the potential that all of this is actually just a corrective structure for a little bit more upside to come, especially if tech stocks are going to hold up well. You might see IBM kind of rally into our sell zone, which is in this 160 to 180 area, and then you're really keen on that short. But if you start to see a pattern that resembles downside, you can see that we're definitely at a level where we can start looking for that sell, and our downside target very much sub 100, probably sub 80. So really, really nice looking trade there, and definitely worth watching. Intel's another one, got a little pop higher. We were looking for a little bit more, maybe a close of this gap before downside, but no guarantees. Anything that resembles a break of this low, I think, is worth a sell, especially looking at put options, maybe even longer dated, because we should see this move quite well to the downside following everything else lower. Johnson & Johnson starting to move into our other buy zone, into our buy zone. We never quite made our sell zone, which made it difficult to buy. Still chance that this turns to the upside and goes into our sell zone before falling down, but also possible that we're already on the move to the downside and this little corrective structure is complete. So still on the sidelines with Johnson & Johnson, but from these areas, there's good opportunity either way. JP Morgan Chase, another one, we're looking for the big fall and then a corrective move that resembles a short entry. Live Nation starting to fall as well, which is good, following our blueprint. Another one that's worth looking at for the short. MicroStrategy staging a little bit of a comeback here, which has been quite interesting to see. Excuse all the lines, I've just been doing lessons for our students. Interesting to see potentially having to expand this into an expanding triangle. It does make sense that this actually becomes your D wave. This is your E wave. Now you have this A, B, C, D, E expanding triangle, and we see a fall from there. I don't really see any scenario where we start to rally from here to the upside and go make new highs. So just kind of waiting patiently for a lack or a fall off in momentum, then you can start to look for shorts again to the downside. NVIDIA rallying strongly, which actually works for the structure that we have, and you can start to see how our upside targets are slowly starting to come into play. We've crossed the minimum, touching on the median and heading up towards that 880 full target. So again, once you get up there, we're looking for shorts from that level to the downside. But yeah, I have to wait for momentum to die out there. Pfizer, interesting to see we broke our little flag, but then never got much in terms of momentum to the upside. So you might find that this little E wave is a little bit of a 1, 2, 3 to the downside, or potentially part of a bigger correction that we were looking at. You may go test these lows at 37, 38 before seeing the rally. I still see this as corrective for further upside. So it's just a matter of timing the market a bit better than we have. So looking for a buy somewhere in this level here if we continue to fall, especially if we break these lows at 38 and start to turn to the upside, then you want to look for longs. Definitely keeping my long outlook on Pfizer. Riot, also another one, kind of surprise rally on Pfizer, but on Riot, but I still see further downside here. Once you break this trend line, you can start to look for shorts. Nothing's changed there. Ross Stores continuing to fall to the downside, breaking out of our flag, continuing to look for further downside moving forward, looking like that rising wedge that is broken for further downside. Spirit Airlines breaking lower as well after our little ABC corrective structure, our little running flat that we called or that formed. This should continue to move to the downside as well. Starbucks, another one that's breaking down through our little flag to the downside. This is the kind of general down bearish move in stocks that we need to take care of and need to be aware of. Breaking out of our wedge to the downside is Seagate, which has another really, really good, really, really big downside target. So definitely another one for the watch list for our members that we need to keep on top of the watch list, which we'll discuss later on. AT&T, another one breaking down. Not potential opportunity here to enter TNT. If this pops higher up towards kind of $20, $30, that's when you want to look for your short, because this little flag is actually giving us a little bit of resemblance of a short trade or short little running flat to the downside. Definitely worth keeping an eye on. If you do get that pop higher, maybe add to a position if you're already in the short, having broken that flag, or just wait patiently and then put another entry below the lows. As you can see, there's a big gap open here, which is a little bit of a concern because you might see this rally quite strongly. So just be aware of that as well in your positioning. Visa still kind of chopping around, no conclusive price action there from our last announcements, kind of waiting to see, but still have that upward momentum, potentially still going to pop higher up towards 260. And MasterCard still potentially breaking lower down towards 320. So still maintaining that long Visa, short MasterCard trade, still working well for us. Exxon Mobil, as you can see, heading into this little double top region, potentially forming a little bit of a rising wedge, interestingly enough. I'll still maintain a bearish look on XOM. We're struggling to figure out what exactly the structure is we're looking at, but now we're starting to get this kind of MACD divergence, rising wedge type move, big move down off the highs. Oil looking fairly bearish at this moment. So potentially either a move down towards 54 and then a rally from here, but the structure doesn't really suit that. Although it is a possibility, more inclined to see higher time frame structures coming into alignment with lower time frame, which means much further downside from here in XOM. Zoom, very interesting look, kind of two potential structures I'm seeing here. Because we've rallied so strongly, this might be the lows. We've done enough to the downside to rally to the upside. It's also possible we had this whole structure kind of misplaced because of this, what we deem to be an A wave, and potentially all of this is a running flat, which gives you a good opportunity to look for another short entry in this kind of 375 to 400 region. If we start to get some downside momentum from this level, then you really want to get into the short. Just means that our downside target is even lower than we suspected it to be. So that's what I'm looking for at the moment. I'm looking for shorts in this region. The only time I'm going to start to look for longs if we get a decent corrective move, some price action that looks really corrective, and then we're going to get into the long from there. So looking for an either or situation, potentially a kind of a straddle opportunity in the options section. But as you can see, this is a really nice little B wave structure for this to be a very clean ABC correction. We've got the MACD crossovers on the daily, which is beautiful. And then you can see how all of this would actually just be one big impulse to the downside with a little bit of choppiness in it. So watch Zoom to turn to the downside when you really want to get into those shorts. Lockheed Martin still kind of chopping around, messing around in this area. Another one that has a little bit of a rising wedge type structure to it and maybe a break out of that, but also a corrective structure that could rally to the upside. But the higher time frames definitely resembling further downside in my view. I don't really see any other option unless we go and test these highs, in which case all of this is your B wave. And then we can start to look for trades up at those highs to the downside. But as it stands, still looking for shorts in Lockheed Martin. Just need to be very careful about choosing a really good entry point. PayPal looking interesting. Went to break these highs. I still maintain my bearish outlook as it stands. Potentially just a little bit of a zigzag correction for further downside. But obviously a zigzag which doesn't give you much conclusion as to where we headed from here or what the timing is. It doesn't give you a lot of conclusion in terms of high probability trade to the downside. So patiently waiting to see how things develop. Maybe we need to just look at this as a trend line, a neckline that breaks to the downside. Then we can look for the short. But right now on the sidelines waiting for clarity. While Tesla kind of following our blueprint as we spoke about, we were looking for Tesla to chop around in this region, go test the lows once again, pop from there, and then move to the downside. That blueprint is still in play a week later, and we're just going to wait and see how that develops. And as you can see, it might only be kind of end of July before this plays out fully, and we can look for that short. But I'll still maintain a bearish outlook, looking for continuation to the downside. It's cool, guys. That's it. That's for US equities. As you can see, generally still really bearish, although there's a couple of charts that have a little bit of a confusing look to them. So kind of look for those cleaner price action charts, look for those clean setups that we have in a lot of these charts, like IBB and some of these others like Seagate, which we'll discuss in the members area. And then you can start to look for some really, really good longer term shorts and just wait for those other charts to clear up. No need to chase anything at this point, just waiting to see how things develop. And then we can look for really clean short setups, especially in the financial sector. Once we get those little short setups, then we're going to be in it for the long haul, because that's a really, really nice short setup, especially in some of the individuals. You guys might know what I'm talking about, members might know what I'm talking about, which specific individual finance stock I'm interested in. That's the one we're going to be targeting. We're waiting closely to see what that setup is. We'll chat about that in our webinars. Cool, guys. Hope you have a great week. We'll chat again next week.